All right. Hey, everyone. How you all doing? Mark here, Mark Pre-Markets. Thanks for joining me for another Bitcoin video analysis. Hold on. I'm going to adjust my microphone here in 1 second. But I want to welcome you all. Hold on. Let me just do this now. Hold on. Okay. You guys should be able to hear me better now. All right. Cool. You guys should be able to hear me and see me, right? Let me just double check real quick. You guys see me, hear me okay? Give me some yeses so I can continue. So welcome to the stream. If you're new and you're not familiar with how this works, here's how it goes. First, I'm going to run through my Bitcoin analysis. Actually, I'm going to talk about the economic calendar first real quick, then Bitcoin analysis. Then I'm going to answer your questions. Now, today, I need to keep this at an hour, so we're not going to do 90 minutes, okay? So if I miss your question, I apologize in advance. I see people put a bunch of questions in the chat here. So I will get to those questions. I am simulcasting on TradingView. So we're going to talk about that here in a moment. All right. So other than that, also, if you'd like to share what country or what city you're from, that's always a fun fact. Okay. So other than that, let's get this thing started. All right. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. Now, let me just say hello to a few people. I got all my regulars, right? Got to say hi real quick. Hey, Steve, Stian, good to see you. Kai, all right. Alex, Mr. Plow, all right. I see Peter and Bill, of course. And all right, cool. Good to see everyone. All right, so first things first, I have a quick announcement. You guys should be able to see my chart as well, right? You guys see my chart? Just want to make sure that you guys can see it. Just give me a couple of yeses real quick. And while you're doing that, quick announcement. And by the way, this has been cleared by TradingView. So what I'm about to say is allowed to be said. If you're not familiar with 8Cap Partners, they are a Forex and CFD broker based in Australia. And they have recently partnered with TradingView. As you can see, I'm using 8Cap charts. If you notice, my feed is 8Cap, right? It used to be Coinbase. I switched to 8Cap. They have partnered with TradingView and integrated their feed into the system, which means when you have an account with 8Cap, you can trade through TradingView. Now, why is that a value proposition? Because 8Cap is a MetaTrader broker, okay? And if you're not familiar with the MetaTrader platform, it's an old platform. A lot of these brokers, they have no choice because that's really all that's out there based on the connectivity, connectivity-wise, right? There's a lot of benefits to MetaTrader in that sense. But as far as a platform for a trader, it's just obsolete. And TradingView is unmatched, okay? So having the combination, being able to trade on the TradingView platform with your 8Cap feed, well, that makes a lot more sense. Now, 8Cap, of course, has a lot of other competitive features. They have good spreads. You should check all that out. And there's a link in the descriptive portion. You can check that out there. If you follow that link, I am an affiliate, so I am compensated for that, just so you know. But that's the story there. If you have any questions about that, please let me know. Again, this was okayed by TradingView, so it is not a violation of house rules. How cool is that? All right, so let's get into Bitcoin here, shall we? All right. Again, if you have any questions about that 8Cap stuff, just send me an email or whatever. You know where to find me. Now, one thing I want to say is let's talk about the economic calendar. Each week, you should be looking at your economic calendar. By the way, because of 8Cap, by the way, I may be streaming more frequently, all right, because they are interested in getting the exposure and they're willing to work with me on that. So possibly, I'm not promising anything yet, but possibly next month I will be on every Monday. We will see, okay? But right now I'm still on every other Monday. All right, let's talk about the economic calendar. Every week, you should be pulling up an economic calendar just to see what's going on. Now, this week, there's only one event worth mentioning. Can anyone tell me what event that is? Now, let me move this over here. I got to move this over. Can anyone tell me what that is? There's only one event worth mentioning this week on the economic calendar. There's a few other things going on, but they're not even worth mentioning. I'm not even going to mention them. Okay. Kai got it. Of course, Kai. Yeah. Okay. Will, you got it too. Hey, Will, good to see you. All right. Will, aren't you from, are you from, no, I may get the wrong one. I always confuse the Will Reese. Anyway, Jackson Hole, right. Wyoming. That's right. That's right. Hey, Armin. That's right. You guys got it. Now, why is that important? That's the only thing worth mentioning this week. Everything else, it doesn't really matter. You should be aware of it, but most likely the market is going to wait for that event. Now, if you're not familiar with the Jackson Hole Symposium, just Google it, check it out. You'll see what that's about. It's basically a once-a-year meeting for central bankers, right? That I guess the government pays for, and they basically get to pretend that they're working and they party. You can only imagine what a central banker party is like. I'm sure the food is good and the drinks are probably really strong, but can you imagine how bad the jokes are? I mean, I would be considered funny there. I'm not even funny. Anyway, that's the jokes for the today's session. So the reason why Jackson Hole is important is because you have Chairman Powell speaking, and it's going to be the whole, I believe the subject of the entire symposium is interest rates or inflation or whatever. I think it's inflation. So any news that comes out of there that's surprising can move the market, which means the market is probably going to be waiting, and it's going to be very erratic. Now, if you notice, they choose to do this meeting this week of the year. So this week, in my opinion, is probably the worst week to be in the markets, okay, especially on smaller time frames. Price action will tend to be very indecisive. You're probably going to see a lot of fake outs and a lot of failed moves, lack of follow through, that kind of stuff, highly random. So if you're going to take a break, this is probably the week to do it. Does that make sense to you guys? So it's very important that you understand, because the charts are not going to tell you if there's a surprise coming out of that meeting. If there's some kind of comment made about something that the market has not priced in, you will see a range expansion out of nowhere. Let me just give you a quick example. The week before, we had the FOMC minutes on Wednesday, right? Now, usually the FOMC meeting minutes are not really a big deal. They come out at 2 p.m. Eastern time, and often they're non-event or they're not worth mentioning. Well, on that day, the market reacted to the meeting minutes. So just to kind of give you an idea, anything that is relevant to interest rates or FOMC is going to be more sensitive. CPI reports, non-farm payroll reports, they're going to be more sensitive than usual. NFP has always been a big number, but it's going to be, more sensitive now. And if there are any surprises, you can see a range expansion, and there's no way a chart is going to warn you of such a surprise if the surprise happens to go against what the chart is currently saying, okay? Remember, markets price in all the known information in the world. When new information comes in, the market needs to adjust. So a chart will be useless to you in this way, all right? So I want to make sure that that's clear. All right, now let's talk about Bitcoin. You can see my chart here. And if you read my analysis yesterday that I published, and if you read the one the week before, what was I talking about in those articles? Well, I was talking about this area as a potential lower high, okay? That's before the sell-off. I had called 3 sell signals previous to that, which there was a little bit of profit potential, but never any follow-through. That's the market, okay? There's no way to know which sell signal is going to follow through. That's why you have to have a very open mind and be prepared to adjust if you get a conflicting signal. There's one conflicting signal after another. But the thing is, and I had some people ask me questions about Bitcoin turning bullish and all this other nonsense. Nothing has changed, in case you haven't noticed. Economically, nothing has changed. We have a Federal Reserve that's all about raising interest rates. We have all these other problems. Have you seen the dollar? Nothing has changed. Have you seen the bonds? So for anyone to start to think, oh, maybe things are changing, you're just being fooled by all the nonsense out there. Understand that 99% of the stuff that you consume is worthless. It's like eating pizza. I made this analogy before. Pizza is not good for you if you eat a lot of it. So it's safe to say that you can avoid consuming 99% of what you consume, and you will still be in the same situation. Think about that, okay? So what I'm saying is the information that you need to consume is actually on your charts. You just don't know where to find it, but it's all there. That's all I use. I don't use anything else. I certainly don't pay attention to any news at all. Even when the FOMC comes out, when they have their meetings and they come out, I look at the price, and the price tells me what I should be thinking, okay, based on how the market reacts, because the market knows everything. So again, people that seek logic, right, they ask the market why. You're asking the wrong question. You should only be asking where, okay, where, and what should I expect at that location? When it comes to technical analysis, that's it. People that grasp for why are looking for some sort of control, and it doesn't exist. There is no control, okay? You're looking for some sort of certainty. There's none. You have to look at everything in terms of probability, and that's where charts can be helpful. Charts can help us gauge a probability, and then it's up to the market to do the work from there. You don't do the work, the market does the work, okay? So getting back to Bitcoin here, here's the thing. This is a lower high. Now I see a question. I have to answer this question real quick because, oh, you were in New York City? Okay. I saw a question here by Peter, and I just, that relates to what I'm about to say. So I want to answer that because he asks here, I'm going to put it here so you can see it. I saw a comment in your article that 24K price isn't a lower high until the price goes below 17K. Okay, Peter, you got that all wrong. Okay. You need to reread their article. This is completely wrong. So that's a very important point of my article. And what I was pointing out is, as long as price stays below this resistance area, all right, this area right here, it's bearish. As long as price can't get above there, then it's reasonable to expect lower prices in the near future, like 17K, like 14K, because the structure is confirmed as bearish, okay? A bearish structure is a series of lower highs and lower lows. We have a lower high over here, okay? Up here too. Those are all lower highs, lower highs, lower highs, lower highs. Now people will say, oh, but there's higher lows over here. The market's bullish now. Not relative to the bigger picture, and the bigger picture carries all the weight. The bigger picture is shaped by the economic environment. The economic environment has not changed. So all this bullish nonsense is nothing more than nonsense. Anyone that's buying into this is asking for a lot of trouble, okay? I still, even at this time, I would not be buying Bitcoin for the bigger picture. Now, like I said before, I've said this before, it's never a bad time to invest, but this is certainly not a time to be aggressive. You know, small bites are the only way to go. Small bites. A small bite, to give you an example, some more specific context, if I had a $10,000 account right now and I had nothing in it and I was looking to begin investing on something like Bitcoin, which would get a tiny allocation because it's a highly speculative asset, $50. $50 a month, okay, for maybe the next 6 months to see how that goes. That's it. That's nothing, $50, okay, because I'm anticipating prices, I'm anticipating a test of 17K based on this structure. All right, now let's talk about setups, because, you know, the title of my video always says setups, and people get upset when I don't show setups. Let's talk about a potential setup that's developing right now, and then I'm going to get to your questions. So we had the sell-off, right, off of the resistance area, which was not a surprise. In fact, I described this sell signal in the previous article before it followed through. I described what it would look like. Go read the article, okay? Now, in my most recent article, I described this, which is developing now. So I said that at this point, because the move is basically in progress, it's hard to short something like this, right? So you don't want to just jump in and just short it just because, you know, everything is pointing bearish. You have to be very careful in those obvious situations. But it's possible to get a trend continuation pattern, okay? And those can come in a few forms. And one of those forms, which I specifically mentioned, is developing right now. That's this inside bar. See it? All right, that inside bar, it's still open. But once that closes, when the low of that candle is taking out, or the low of this, of the broader, the larger bar, if those lows are taken out, you have a new sell signal in play. That's a continuation pattern, okay? Now, keep in mind, the 20K area is a psychological area. It's pretty heavy. But I would anticipate that if you get a continuation signal, the likelihood of a break and follow through is greater, because the environment is bearish and favors bearish price action, right? I said before, all you need is some surprise catalyst out of nowhere that no one was expecting, and then you get this, right? So that next leg can happen. Now, will it happen? I don't know. I just said before that we're going into one of the probably the least active weeks of the year. So you may not get that follow through as you might expect if you get short, but you have to be prepared for the conflicting signal if it appears. So if you're, for those that are short, I'm not shorting this, okay, because I don't short Bitcoin, but I'm telling you what the signal will look like. You take out these lows, you have a new sell signal. You can measure your risk from this high right here. That's it, okay? This risk, you missed that one, so you can't go by that one now. You have to go by this one, which means obviously there's going to be a greater chance you get stopped out if this thing gets noisy. All right, does that make sense to you guys? So the next leg lower, keep in mind, bearish momentum usually occurs quickly. So you should get a range expansion relatively quickly, all right, within a few days. And that range expansion should take you below 20K. Now, if anyone managed to get short above, that 25 or 24K area, actually the price that I described was 23.5. If you got short in that area, you should be out of some of that now, because this is a nice move and you don't want greed to get in the way. I know a lot of people have a very hard time getting over their own human nature, and greed is part of that. You have to overlook that, and you have to look at the risk versus, what you're looking to make. You have to look at everything in terms of that risk. And if you risked 2,000 points, right, and you're up 3,000 points, you take something off the table because you're getting paid on greater than what you risked. Over time, that's the only way you're going to see a positive effect in your account. All right, so that's pretty much my Bitcoin outlook here. So you have a short setup developing now. Candle needs to close. Lows need to be taken out. Otherwise, this thing is poised to go lower. That would be your next opportunity to get short. Otherwise, if you're thinking long, you're taking a lot of risk. As far as longs go, if you want day trades, that's one thing. But bigger picture, you're fighting a lot here. You're fighting the broader trend. You're fighting now short-term momentum. There's no reason to be going long this thing and expecting anything spectacular, right? This thing, now you have 24K in front of you, okay? Now you have this level, 24 to 25K. And like I said before, as long as that level stays intact, this thing is bearish, okay? I'm going to say that again. As long as it's intact, this thing is bearish and lower lows are likely, all right? Now, unless it proves otherwise, you always have to keep an open mind, like I say. All right, so that's my Bitcoin analysis. Let me know if you have any questions about it. I'm going to now start looking through the chats to see what kind of questions I got. Let me say hello to TradingView over here, because I haven't seen you guys in a while. How are you? All right. Let me just scroll up. Can I scroll on this thing? This thing's giving me a hard time today. Hold on a second. Always giving me a hard time. All right. So let me just see what I got. So I got Steve. Hey, Steve. All right. Cool. Appreciate that. Yeah. Boost the like button or whatever. The turbo boost or whatever. Cool. All right. Hey, good to see you. All right. No problem. Okay. Hey. All right. Can see a picture. Okay, you have to. If you can't see the picture, you have to refresh. Just refresh the your browser. All right, from Croatia. Hey, welcome. Okay, cool. All right, yeah, you have to refresh. You have to refresh, people. I can't help you with that. Refresh the thing. Okay, I should probably say that in the beginning. Okay, let me see. All right, so let me go back to the other one here, because I had some questions in there very early. So Stephen. All right, DHER. Now here's the question Stephen asks, and he's from Bordeaux. He's on vacation in Bordeaux. How nice! I think they make wine there, don't they? Do you look at fundamentals to measure risk? All right, so let's first take a look at the symbol. All right, what is this thing? Obviously it's a stock. Okay, and let's go here to the weekly chart because I want to see the bigger picture. Okay. It's the first place I want to evaluate the trend, as my students know. So he says here, do you look at fundamentals to measure risk? The recent rally was caused by, okay, break even, which was anticipated. Okay, so here's the thing. I don't look at company fundamentals at all to measure risk. I mean, you know why? Because economic fundamentals carry more weight. It doesn't matter if the company has great fundamentals or not. If the environment, if the economic environment is not supportive, the company is going to suffer like everyone else. There's no escaping a weak S&P. So, positive fundamentals are good when the environment is good. Your stock is more likely to outperform, other competitors or others in the industry or whatever, okay? But in a not so good environment, everyone suffers. Now, so keep that in mind. Don't get steered the wrong way by company fundamentals. A lot of times they just like to try to make a big deal out of them and try to, spin good stories out of them to get people to buy. Don't get into that nonsense, right? Unless you're like an owner of the company, like a real owner, then sure, you should know what's going on in your company. Otherwise, they're pretty much a waste. I don't use them. I look at charts. You know why? Because all the known information in the world should be baked into the price. All that complex fundamental nonsense should be baked into the price, because there are a lot smarter people out there that can find problems or whatever, right, or good or bad things in that information, and then they're going to make their trades or their investments on it, and I can follow those tracks. That's all I need to see. So as far as, look, your little rally, yeah, I see what you're talking about here. This move right here is not good, right? This is a very large bearish structure, which means the general trend has changed on this chart. Now, we can look back and say the broader trend is bullish, right? Higher lows and higher highs, but it broke these supports in your midterm trend. Should not do that in something that's strong. So it's no longer strong. On top of that, it pulled back significantly, found some support, and now it had this rally, right? This rally is now developing what looks like a lower high. Where there's a lower high, a lower low is likely to follow. So not only do you have all those problems or all that bearish information, look at this candle. All right, on the weekly, bearish pin bar. Definitely not something you want to see if you're long. All right, and it's active because it took out those lows. I mean, look at this thing. And today is Monday. So I would be anticipating lower prices based on this price action and on this structure. Does that make sense? So support levels that you should be looking for, 39.60 area, right? 39.50. That's your first area of support. Okay, that's this area over here. So this is probably not the best choice for longs. And if you're looking for shorts, you had your spot. Now it's sort of on its way. So if you short this thing now, you're taking more risk. If you're long from a lower price, there's a sell signal that is in effect. So you certainly it would be a good idea to make adjustments or, unload something or whatever. Again, I can't give you trade advice, but I'm just giving you an idea there of what to consider, because this thing closed at what, 47, whatever. I mean, you're looking at a good $10 or more pullback potentially, right? That's the risk you have to account for over the next couple of weeks. Does that make sense? Okay, so that's DHER. Thanks for asking, Stephen. Stian, all right, CHZ. Let's take a look. CHZ. I know you've asked about this before. USDT. All right, what's the story with this? Okay, so against Tether. Now, here's the thing. I can see why people may have some interest in this, right? Look at this little rally right here. A lot of people get sucked into nonsense like this. Look at your bigger picture. This bigger picture is, I would consider this more range bound or neutral, because you had the initial, this nonsense back here, which is, is all nonsense and hype. Okay. Then it's been consolidating ever since. You can argue that this entire structure going all the way back is one gigantic higher low. You can argue that, yes. But the thing is, you're still subject to Bitcoin, right? Bitcoin is still the leader. And even though Bitcoin has pulled back and this has not, that doesn't mean much, because this is probably not going to go very far. These things don't trade on their own, right? There could be some hype in some chat room somewhere that's driving this thing. On top of that, you have a weekly pin bar over the previous week, which is not active yet, right? It hasn't taken out that low yet, but I would say that this thing is very vulnerable, because look, you have this area right here, which can be a lower high resistance. Look at all this overlap. See this price overlap over here? It's a previous support. Look at that. Okay, that's not coincidence right there. That is certainly a level, an inflection point to keep in mind. So you're in an area, you're in a resistance area that is likely to find selling activity. and you're now also facing a weaker Bitcoin. So if Bitcoin really gets hammered, Bitcoin's only pulled back a few thousand points. These things are not one-to-one. If Bitcoin starts pushing 20K, I mean, that is likely to put pressure on this thing, okay? So just something to keep in mind. This is a highly vulnerable area. I would not be looking for longs. Definitely not, okay? If you have some, good place to lock in some profits, but that's about it. Should you short these things? I'm not a big fan. There's plenty of other things to short because these coins can be very erratic and they could be driven on some complete irrational nonsense. So, if you're going to short them, you really have to be on top of it, right? Because things can change very quickly. I hope that answers your question. Okay. So double top. So your question is double top. If you're comparing that top, if you're comparing that to this, well, no, that's not a double top. That's a lower high possibly developing. Okay. If you're comparing those two, you can get two pin bars, which would be like a mini double top. There's a name for that as well. But I'd be looking for a lower high on something like that, especially in the face of what Bitcoin is doing. All right, let me move on here to the other chat. It'd be nice if I could scroll this other chat, but it doesn't let me. Why not? Let me see. How about if I do this? Oh, there we go. All right, so let's see what we have here. Sold Apple for 24 times. Okay, nice job. Yeah, I mean, Apple had that nice run. I mean, that was one of the key drivers of the nonsense rally that we've seen. Okay. Yeah. Yeah, you guys, whenever you come to a trading view stream and you don't see anything, just make sure you refresh the browser. That's technology. All right. My first month time for, okay. All right. All right. Watching from Manhattan. I got a guy from Manhattan. Wow, I can almost see you from like where I'm located here. I never get people from Manhattan. You guys are always watching Kramer. Okay, and I'm not talking about Cosmo Kramer. All right, let's see what else we got here. Anyway, thanks for joining Manhattan. All right, cool. I used to work there. Kai. All right, Kai's asking about LMT. Let's take a look. LMT. So this is a defensive stock. Okay, it's in the defense industry. Let's take a look. I'm on my weekly. Yeah, I'm still on my weeklies. All right. Now, typically, there's some reason that there can be some reasons for getting involved in stocks like this. Looking as long as okay, hedging position, not all short, to be not all short across equities. Okay. Well, that makes sense. This thing has a bullish structure if you consider. Look what's going on here, right? It broke out of this consolidation, right, in recent time, and look, it produced a buy signal off of a previous resistance. That's a sign of strength. Now look where it is, right? It has taken out this little mini resistance right here. Something that's strong usually takes out resistances. Okay, so I would agree that this is more of a long than anything else. The fundamental arguments I'm not going to make because I'm not familiar enough with them. Again, I trust price. So in something like this, if you're not long, but you said you're looking for a long, if you're looking for swing trades, then you're looking for one possibility would be a double bottom, right? Something like this, if you can retest this area right here, which is what, around the 373 area. So 373, 360, 350, any test of that area. What is this low over here? The low, is that 373 is the low? So even if it goes slightly lower, right, into this area right here, even if it does something like that, that may still be a possibility. That would actually be your best reward risk if the market can give you such a possibility. Of course, you really should wait for confirmation. Don't step in front of that, because if something changes on this thing and it starts breaking supports, you don't want to get caught. So I would be looking for the double bottom, the failed low, or the potential higher low, which can occur around here. What is this, 407? So you're looking at the 400 even price right around this area here. You could get a possible higher low there. Those levels that I just described are attractive reward risk and better probability compared to where you are now. You don't want to be chasing this thing, okay? So I would be patient and wait for the pullback, especially since we have a general market that, is not exactly in favor, okay? The Fed, don't fight the Fed, as they say. So good question. Good question. All right. Hey, Alex. Okay, so dollar index. All right, dollar index and bonds you want to see. Okay, so let's take a look, right? Let's start with the dollar index. Now look at this. Look at the dollar index. I'm gonna go to the daily chart. Look at this. Now I've been talking about a strong dollar for the longest time. Does this chart look bearish to you guys? You know, it's funny because when the dollar does something like this, people, the dollar's bearish now. Yeah, the dollar's bearish. Yeah. Lower highs, blah blah blah. Does this look bearish to you? Look where the dollar is. What is the price here? Closed at 108.95. Look where the dollar is. It's about to make a new high. Have you seen the euro below the dollar? Have you seen that again? We shouldn't be surprised, okay? So the dollar is rallying for whatever reason, going into the Jackson Hole Symposium. What are they going to say there? Does the dollar know something? This thing is going for a higher high, all right? Higher low, higher high is likely. Can the dollar give us a double top? Sure, anything is possible, but I certainly would not step in front of this thing. I would not short this. You got to be nuts to sell this, especially since the Fed is behind it, okay? Which means this is a bearish sign for anything against the dollar, like Bitcoin, like the euro, like the pound, okay? These things are going to feel the pain. Like stocks that borrow a lot of money, like small cap stocks. Anything highly speculative, an expensive dollar is not good for them. Even though it's not one-to-one, this puts pressure on. So this is bullish, right? So what to do now? Well, if you want to try the dollar breakout, meaning, you know, short the euro and see if there's some follow through, okay. But again, you're taking a lot of risk, because if you were going to play that game, you should have been playing that game around here, not where it is now. So it doesn't mean that your trade can, you know, fail, but, well, I mean, it can fail. But what I'm saying is the likelihood of a fake out is always very high around such levels. So if you, for example, short the euro, again, it's going to require a lot of babysitting. You may get 100 pips out of it, maybe 100, 150 pips or something like that. But it can also turn in your face very quickly, right? So what you don't want to see if you take that route, and it's not one of my favorite things to do, by the way, because it just requires too much attention. If you get like a bearish inside bar or a bearish pin bar in this location, that's a sign, okay, to make an adjustment, or that your breakout trade is probably going to turn in your face. You don't sit there and hope. You don't sit there and be like, oh, maybe, maybe I'm just overreacting. No, you're taking a lot of risk to begin with. You have to respect that risk. Okay, does that make sense? So I'm still bullish the dollar. I've been bullish the dollar, and the economic environment supports a strong dollar for now. All right, now let's see. So you want to see the bonds, okay? ZN1. Let's take a look. Is this a surprise? Are you surprised? You shouldn't be. Now, here's the learning lesson here. Okay, this is what you need to learn. When the bonds do this, now when the bonds were doing that, okay, people they just never learn. And I think about that a lot. It's like we see the same things over and over. You would think people would learn, right? People see this and they say, the bonds are going higher. The bonds have reversed. Everything's going to be okay. Let's all buy AMC now. Okay, but I saw this and I talked about, people that follow me know, I talked about the risk in this area. It failed. Look where it is now. This is a reflection of rising rates, which we saw the US dollar. Of course, these two should be negatively correlated like this. Lower bonds should lead to a higher dollar, okay, or it's going to put pressure. It's going to help stimulate a higher dollar. And that's what we got here. So the bond market, as I said, all summer has not changed. Our economic environment has not changed, okay? So even though we had this rally, it was nonsense. How many people got sucked into this? How many fools believed all these big mouths who were saying, oh, Bitcoin's going to go to 40K now? I was saying, I don't know how it's going to do that in this environment. There's nothing supporting it. There's no, what catalyst is going to get it there? You're fighting the Fed. Don't fight the Fed. So here we go. Pulling back, rising rate. bites. Okay, so as long as the bonds look like that, don't expect anything bullish to, if anything bullish appears, it's limited in potential. And that's the message that I've been pushing all summer. If you read my articles on TradingView, I've been saying the same thing. And the party begins with the bonds. So now, are the bonds going to make a new low? That's really the question that the market needs to answer. Are the bonds going to make a new low? Or are the bonds going to find support somewhere in this zone, right? If the bonds find support and they prove it, then maybe we have a change developing, possibly. But it's too early to make that judgment now. If the bonds make a new low, all these people that are buying now and investing and they think they're doing the right thing, they're going to find out the hard way that right now is not the right time. It's still a little early. It's uncertain. There's no way to know. So like I said before, if I was going to be putting new money to work, it would be small bites because of this, okay? And that new low is likely to develop because this higher high was barely a higher high. This trend is still arguably bearish. So the new low is a high probability of it. I'm staying out of its way. When I see that bottom put in and I see stability in the bond market and I see some other factors like the Fed maybe changing their talk or making some adjustments that are not priced in right now, then perhaps I'll be more inclined to put more money to work. But right now, I'm not interested in anything because of this, okay? Especially highly speculative assets like Bitcoin and no garbage altcoins that follow it. All right, so I hope that answers your question. Let me see how I'm doing with time. Okay, I still got some time. All right, Coin. Speaking of Bitcoin, here's a good question. Coin. Can you take a look at Coin? Bought some at 50, 60, sold some at 98. Okay, looking to buy again. Let's take a look at Coin. Now, Coin, as we know, it's Coinbase, is going to be subject to the movements of Bitcoin. Now, that's a nice trade you had there. You bought some from 50 or 60, right? The lows here are what, 47? So that 50 area, and you sold some near the high there. Nice job. Here's the thing. This structure it's going to be similar to Bitcoin. So that's a lower high, all right, relative to these highs here. Lower high, right? Lower high. Wherever Bitcoin goes, this is going to go, right? So these lows are likely to be tested. If Bitcoin goes back to 17K or something like that, I would not be buying now, all right? It's too early, and you're fighting, you're fighting a pretty, you're fighting the environment. You're fighting, this is a highly speculative stock, okay, in a highly speculative industry. So you're just fighting a lot here. If you're going to play that game, wait for extreme prices, right? Extreme prices, let this thing test the 60s, the 50s. What price is this thing right now? 70, okay? So 60s, low 60s, mid 50s, those are very reasonable prices over the next couple of weeks. In this environment, I would give it a chance to test those prices. I would not be in a hurry to get into something like this. The probability favors a lower low. Okay, so I hope that answers your question on Coin. Let me move along here. My internet connection may get cut off here soon. So Peter, I answered your question. Hey, Wedge, all right, good to see you. All right, Ben, BTC developed a double bottom at the middle range. Double bottom? All right, hold on a second. So let's go back to Bitcoin here. Double bottom. Okay, don't know what you're talking about. This is not a double bottom. If you're talking about this, let me go back to my 8-cap chart is a little cleaner. Let's go back to my 8-cap chart. Let me get my 8-cap chart here. Hold on a second. Where is it? Hold on. I'll find it. It was here. Oh, here it is right there. Okay, hold on, guys. Sorry. All right, yeah, it's a cleaner chart. So if you're referring to, and I'm going to make the chart bigger. If you're referring to this as a double bottom, that's not a double bottom. This is not a double bottom because this low is taken out, okay? Also, you're too focused in on this structure. You know, for a day trade, sure, I'd make the argument, but not for the larger time frame. No way. This structure is now broken. That's not a double bottom. That's my thought on that, okay? This structure, I mean, if you draw a channel line here, right, from this low up to, you follow this channel higher, it's broken. So double bottoms are not going to carry the same weight. So a double bottom has to be consecutive. Those are better, okay? Consecutive meaning this bottom, relative to this bottom, that would be a double bottom if it was a double bottom. This is not consecutive. Does that make sense to you guys? All right, this is more, this right here is more of a double bottom. See, it's consecutive, bottom, then followed by another bottom, not some other movement in between, okay? So I hope that answers your question. All right, let me jump over back here to TradingView because I know you guys have some questions over here too. All right, so watch it. Okay, cool. So that was a Manhattan guy. I'm so glad you got a guy from Manhattan. Hey, G. Simone, good to see you. Juan, how are you? Okay. Belgium. All right, cool. Got my Belgian people. Nico, hey Nico. All right, give me some reason for a long BTC. Give me some reason for a long BTC. Day trade is the only possibility I can see for something like that because day trade means small bite and smaller risk. There's no reason to be long Bitcoin. Okay, there's just no reason. Even as an investor, I would wait. Or you take your tiny bite for the month and then wait till next month and see where it is. There's no reason to be long. Good question. Okay. Always carries a few eye openers. All right, cool. I'm glad I'm opening your eyes. Was thinking about taking a short on TRB. What are your thoughts on this asset? Okay. Excuse me. I'm sorry. Sorry about that. All right. TRB USDT. Let's take a look. TRB. The other day when I was online, I had a lot of internet problems, and it was in the middle of something important. And today the weather is like really, you can hear what's going on out there, and my internet is perfectly stable. Yeah, it's more random than the market. All right. Anyway, so TRB, and you're thinking of shorting. What are your thoughts on short TRB? All right. This is a pretty nice looking chart. First of all, let's go to a weekly. Oh yeah. All right. So this looks like this is nonsense. All right. When I see a vertical like that, that's hype. That's most likely a chat room somewhere hyping this thing. Man, there's so much hype. By the way, if I haven't told you this yet, you're in the most deceptive industry in the world. There's so much nonsense and lying out there. It's unbelievable. So when you get moves like this, which completely go against everything, right? Completely go against logic and rational thought. Yeah, I can understand why you would want to be short something like that. Here's the thing. First, you have to look at your levels. I mean, this structure here is a mess. So there's really no trend here to really talk about, right? You had these lower highs, lower lows. This resistance broke. So you can argue that this thing is basically range bound in some kind of way, all right? Next thing, where's your next resistance? If you're looking for a short, you do have an old support and new potential resistance right in this area here. What price is that? That's around the 46 area, right? So 46 area, 45, that area. So you do have a potential location. The problem is when I see moves like this, you have to be very careful, all right? Shorting these can be very, very hard. So I wouldn't be in a hurry. Let's put it that way. You have some signs here. Look at this. You see this type of price action? That type of overlap is definitely a signature of too many longs getting long, and the thing is getting heavy, right? So whatever hype was driving it may be running out, and all the longs that were going to go long may be in at this point. That's what this type of price action tells me. Here's the thing. It's early. So this thing is, you're fighting these highs. If you're looking for a short, I'm going to give you two examples, all right? I'm going to give you the aggressive example, and I'm going to give you the conservative example. So the aggressive example would be to wait for something like this. You have an inside bar, bearish inside bar. Wait for that to get taken out, the low, all right? Or wait for this low over here to get taken out, $40, and that's an aggressive sell signal, okay? After such a signal, if you don't get swift follow through, meaning you should see a bearish candle pretty quickly happen, okay, over the next day or so after taking that short. If instead you see a bullish candle develop an inside bar or something like that, that's not what you want to see. Most likely, you're going to have to get out of that short and take the loss. I'm telling you right now, because you could be fighting some very strong momentum here, and momentum can carry a lot of weight, okay? So that's the aggressive short. The conservative short is let this thing have that initial move, right? Let it break some supports first, and then look for the next lower high, which can develop around here somewhere. All right, so imagine this. Pulls back, okay? Maybe pulls back into like the low 30s, and I missed the short, I missed it. No, you missed the initial move, which is the hardest move to get involved, okay? It's the riskiest move. But then it tries one more time, and then you get that lower high, all right? That would be more ideal, a lower risk area, because if you get the lower high and you get a sell signal in that lower high area, the probability is more on your side that a low will follow. Does that make sense? You're looking for basically a broader trend reversal. But something like that makes sense when you have these ridiculous type of moves. Now, keep in mind, let me point something out before you think there's some kind of magic involved here, because if I was a fake guru, I'd be telling you that there's some kind of magic. Look at this here. This right here, let's cut out all this new price action. Let's just look at this over here. If you saw this, if I saw this, I would say that that's the type of sell signal that I just described, okay? And look, it activated and all that other stuff, but instead you got that. So keep in mind, just because everything lines up and starts to go your way, you have to be prepared for what can go wrong all the time. Because, before the fact, that would be ideal. And then after the fact, oh, well, I wouldn't have taken that because, yeah, whatever. You understand what I'm saying? All right, so those are the two scenarios for something like that. All right, good question. Let me see. Okay, so Bitcoin, I covered that. Can you take a look at Ethereum? All right, sure. Hold on, let me go back to the other chat real quick. Let me see what's going on here because I missed a lot of comments. Again, if I missed your question, I apologize. Hey, Scott, good to see you. Okay, all right. If you had 10K budget, would you start putting 1K to work in TLT, the bond market? I wouldn't put 10% of a portfolio. No, I wouldn't do 10%. All right, hold on. We'll get back to that. Let me just check out what's going on here real quick. How a swing trader benefit in bear market where long momentums are usually. All right, that's a good question. I was looking at the chart with CHZ for the double top. Okay. All right, hold on. Just going back here a bit. All right, let me just go back to trading view. Because guys, again, like I said, I have to turn this thing off soon. All right, so Ethereum, I was going to ask if that was, yes. I bought some via, hope it's not a meme stock, electric vehicle stock. Okay. All right, so let me take a look at Ethereum. Now, everything that I said about Bitcoin, by the way, pretty much applies to Ethereum. Now, I know there's been some drama with Ethereum, with the whole merging, or whatever nonsense is in the news. Please never pay attention to news. Again, people that consume news are looking for logic. They're looking to grasp onto something, certainty, and there's no such thing. Price will give you everything you need to know if you believe that price factors in all the known information in the world. That's why I trust price. I don't trust people, especially people that write articles. So Ethereum, look, same story as Bitcoin, same exact story. I don't know why anyone would think that this is going to do anything other than what Bitcoin does. Look where it turned. It was a notable resistance, okay? This coincides with Bitcoin at 25K. Look at the sell-off. Look at the sell signal developing now. So this sell signal on Ethereum is actually active. It took out this inside bar low of 1562. We're at 1560 right now. So the sell signal is in play. If you were looking for shorts in Ethereum, there's one right now, right? It's a little bit ahead of Bitcoin. But again, keep in mind, Ethereum is not a leader. Ethereum is a follower. So Bitcoin is first, right? So if Bitcoin happens to turn around and fake out, it doesn't matter what this thing is doing right now. It will turn around and fake out too. So you can't really rely on these signals on something like Ethereum unless Bitcoin is confirming it. Does that make sense to you guys? So this goes for most altcoins. Now there are some exceptions, like we just saw. with that crazy one that guy TRB. Okay, there are some exceptions like that where they just go nuts on their own, and there's no explanation, right? Like, don't ask why. If there's momentum, you just accept it. Most likely it's being hyped somewhere, okay, or whatever, and they're basically stimulating the herd mentality. And you have to understand, that's why it's so important to understand the academic nature of this business, which most people aren't interested in. I talked about that the other day. People aren't interested in the academic part because they just want to make money. And they only focus on just analytics because they think that's where they're going to make money. And you're not going to make money. Chances are there's so much working against you. If you're not aware of what is working against you, and you're not aware of the liabilities of your own human nature, then you are the profit opportunity. And most people don't even realize that because they're too busy chasing news, okay? And we all have to start out that way, by the way. So anyway, I hope that answers your question. Ethereum, same story as Bitcoin, and sell signal now in effect. Okay, answered Bitcoin. Okay, oh, hey, Jamesy, how are you? From London. Eh bien. I had some other guy, I think, from London here too. I have to do my British accent. I know you guys are going to make fun of me, my New Jersey accent. Eh bien, it's time for some tea. Okay, I'm joking. That's my British accent. I love my Londoners. Okay, VLCN. I hope it's not a meme stock. Okay, VLCN. Let's take a look. VLCN. Oh, all right. So this is an electric vehicle stock. Okay, you like my British accent? All right, cool. So if I visit London, I'll just speak in my British accent the whole time. So anyway, people sound much more intelligent with a British accent. Let's talk about this here. Certainly not a New Jersey accent. So VLCN, you bought some, huh? Well, you have this bearish pin bar on the weekly. Not a good sign for longs. Look at this. There's nothing good about this. If you're in for a small bite because whatever, okay, fine. Look, I believe in the electric vehicle sector, I mean, generally, but you have to understand something about the electric vehicle sector. They borrow a lot of money. So they're going to have a hard time in this environment. So this is a sector I am interested in over the long term, but now is not the time to start putting a lot of money to work. You know, you're taking small bites just to sit on it for a little while. Okay, fine. But bites have to be very small. This thing is at what, $2? I mean, $1 is not unlikely in this environment. Now, again, I say I'm very pessimistic about a lot of things. I'm very bearish, but I'm this way because that's what the environment tells me. When I see changes in the environment, I have no problem turning around and being bullish on everything, but we're just not there. Okay. And I'm not going to get sucked into hope and all this other nonsense that people are constantly throwing out there. I'm not going to get sucked into that. I look at price and I look at economic pieces of the puzzle. And until they align, I don't see any reason for these markets to sustain any rallies anytime soon. We need a friendly Fed at least, and we don't have that. Okay. So anyway, okay. I'm more of a core blimey. Oh, one of those. Okay, cool. That's beyond my British. I only know, like, American British accent. Okay, no problem. Thinking it might be getting a little, and okay, yeah. Well, that TRB, yeah. If you're buying it now, if anything, that TRB, buying it now is a really bad idea. You don't want to be buying it now. If you have some from lower prices, certainly not a bad place to reduce risk. Does that make sense? Okay, so that was that one. All right, let me jump over here. I got to wrap this up here just in a few minutes. Again, it's a short day for me, but I have to, so let me see what else I can answer here real quick. Okay, hold on. Just going back. Right, so I see I got Will from London here too. I mentioned that, right? And NYC. Yeah, okay. Okay, no problem. Tillen Steen, you always talk about the correlation between stocks and Bitcoin, but is this also the other way around? So if Bitcoin, that you will see, okay, so here, this is an interesting question from Steen. All right, he's talking about, the Bitcoin correlation. Now, the thing is, Bitcoin is not a leader in terms of the stock market. The stock market is the leader because the stock market is reacting to the bond market, basically, right? So it's not going to be the other way around. It's going to be stock market first, and then Bitcoin is going to follow, most likely. Bitcoin is sort of like gold. Remember that chart that I showed you, BSC? So I'm not making this up. This is something that is known in the industry. Bonds are first, stocks, and then, things like Bitcoin, gold, oil, right? They don't lead, they follow. And they're at most affected by things like interest rates, okay? Because they're priced in dollars. So anyway, hope that answers your question. Good question. Okay. Hey, Armin, no problem. Well, thank 8cap. How you answer the question. Okay. How often you answer the question asked. Okay, I'm not sure what your question is, but how often you answer the questions asked. I try to answer them as frequently as possible. Sometimes I don't see the notifications go through, but I usually try to answer them at least within a day or so. Okay, to answer your question. Hey, David, good to see you. Hey, Travel, how are you? All right. A question about money flow. If stock market bleed together, where is the big money going to flow? We know that money doesn't. Right. So what you're talking about, Stel, is sector rotation. Okay, and that's where, like, you have to look at the S&P today. Right. No one asked me about the S&P. Look at this. And I bring this up because of sector rotation. The economic environment hasn't changed. All right. Even though we had this rally, I've been telling people the whole time, this is not a rally that's sustainable because we don't have a friendly Fed. So in a situation like that, you need to understand what asset classes are more likely to at least be stable or perform better in such an environment. You would think the banking sector, but the banking sector, I think it's XLF. Let me see, financials. Is that right? I mean, the banking sector is actually the biggest weight in this, right? The banking sector is actually the lead in all of this. So you have to consider sectors that are going to at least be defensive in nature. You have to understand your economic environment. And again, we talked about the business model, the what do you call that thing? The business cycle. I've talked about that, not here, but I've talked about that. And you need to really be aware of that. So to answer your question, you need to understand what performs better in what part of the cycle. If right now we are in a cycle that's going into a recession, then what should be coming soon is bonds, right? Should be rallying. That should be coming soon, but soon can mean in a year, right? Certainly bonds are not rallying, not yet. Okay, they tried, but they gave it back. So far, they're giving it back. We have to see what happens here. But the bonds are going to give us the first sign. So, what does better in a rising rate environment? I don't know. A lot of things are going to suffer. Stocks are going to suffer. So you want to find defensive stocks that pay you to hold on to them. Solid companies that do well no matter what, right? They're not going to be high growth, but hey, you can't expect high growth in such an environment. So you want to find defensive, right? That's usually what funds do. They put their money where it's safest, even though they still may feel some pain. It's less pain than what like the tech stocks are going to feel. Does that make sense? So I hope that answers your question. Learn about the business cycle. Okay, all right. How swing traders benefit in bear market where long momentum. All right, so Stel, another good question. Swing traders have a benefit, I think, over investors because you can be more nimble, but you can short other markets, right? You don't have to be involved in Bitcoin. You can get short. There will be bear market rallies that you can participate in, but you really have to understand their nature and understand what your risks are. So, I mean, swing traders can benefit. It's not as easy, but they can still benefit and keep their account together just because the market is generally bearish. Okay, you're just looking for short-term movements. I mean, have you seen the euro? Have you seen this euro? I was talking, look at this thing, right? This is just a reflection of the dollar. I was talking about a short. I don't know if you guys remember, but I was talking about a short in that 103 area, okay, on the euro recently. I'm not in this, but man, I was talking, I knew the location and I missed this trade. But there's a nice example of a swing trade in a bearish environment. It was all there. It all lined up. And the dollar, I mean, it was all there. And this environment favors a bearish euro. There's no reason to be long the euro, all right, unless you're a day trader and you want to take a small bite. All right, does that make sense? Okay. So TLT, that's the bond market, right? So if you're looking at the bond market, the bonds, right? Yeah, the treasuries. You're looking at the bond market, and it's too early. It's too early to go long. So you're talking about putting long-term money to work in the bond market on the long side. I wouldn't put 10%. I'd put, if you want to try to play that game, because as the recession plays out, right, the bonds should turn first. So it would make sense to, if you're going to invest in something, right, bonds would make sense for the long term, but it's still a little early. So how do you adjust? Smaller size. So on a $10,000 account, you're saying 10%, $1,000 per? No, I would look at like 250, right, or $100, 1/10 the size, because you're looking at a potential lower low on the bonds. Potentially, we have to see how that goes. Okay. All right. Do pitchforks have every? Wedge, pitchforks. So you know what? Honestly, I've tried to mess around. They just don't make any sense to me. So even though they have the idea of, you're measuring something and they project something, maybe there's some price action value, but I don't use them at all. And I have not found a way. I have not found any value. So it doesn't mean that there's none, but you're going to have to experiment with that one. I don't have an answer for that one. Okay, good question though. All right, any other questions? Okay, I'm over now. I'm going to wrap this up here in just a minute. Any other questions? Let me just see if I have any other questions I can answer about TradingView. Do I have any other questions over here? There better be some people here watching me, or I'll be mad. Okay, I have noticed be following the 10-year bond market quite closely. Yeah, well, because Bitcoin trades in dollars, okay, and the bond market is inverse to dollars. Okay, the 10-year note or any of the bonds, they're inverse, right? The bond futures of bond prices are inverse to the yields. So dollar goes higher, yields are going higher, bond prices going lower, puts pressure on anything highly speculative like Bitcoin and all the junk that follows it. Okay. Okay. What is in Forex? Okay. But apparently I sound just like, oh, oh, great. All right. British accent talk there. There is, the dollar index, that's really the key thing. That I always check that thing, because you can't escape the dollar index, right? The US dollar is still the world reserve currency of the world. And all these Forex pairs are going to act in accordance with the dollar. So if you're going to use, like, you can use the dollar index like you use the S&P with stocks. Yeah, you can use it that way. Just understand that some of the correlations they're not all one-to-one. Like the euro against the dollar, as we can see here, it's basically one-to-one. But there are other currency pairs that, they're affected by the dollar, but not so strongly. Does that make sense? So you need to be familiar with that. But you're not going to find something that's going to give you some kind of lead. It's not going to be perfect like that. That would be an advantage, and advantages don't exist that easily. If there was such an advantage, it would vanish very quickly, because the industry, right, the really smart money gets on that stuff first. As a retail trader, you have no chance playing the statistical advantage game. There's a chance with behavioral repetition in behavioral. That's where I believe the retail trader has an advantage, if you understand. But in order to capitalize on that, you have to be able to get beyond your own human nature first. If you can't do that, then you are the profit opportunity. Like I said before, most people aren't even aware of what that is. All right. Okay. So, Bill, I got to go. I got to wrap this up now because I'm over the time. I've been at this 1 hour. Yeah, I only have an hour today. Okay, guys. So again, I apologize if I missed your question. Send me, where to find me. You could send me your question again. Perhaps I can answer that there. But all right. You know what, Bill? For you, real quick. Bill's helped me out in a lot of ways. You took a short on this? Are you kidding? You're kidding, right? That's not a short. It's an aggressive short. Let's take a look at the weekly real quick. Oh man, yeah. So look, you're certainly, it's a situation like that, I would be looking for the higher low. You know, you're hoping that this thing pulls back, but you're fighting some very steep momentum. So I would be extremely careful on that type of short. It's very aggressive. I mean, you're selling in front of something that, you know, yeah, sure, it can pull back, but how far? Okay, that's a nice chart though. Thank you for bringing that one up. Okay, you guys. So I'm going to wrap this up. Hey, thank you all for joining me today. Again, if I missed your question, I sincerely apologize. I will be looking to get back on more frequently. Okay, thanks. You can thank 8cap for that. And we'll leave it at that. So I hope you got something out of the stream. I hope you got some value. That's very important to me. And, you know, let me know if you have any questions from there. Again, check out. So next Monday, I should be off, but like I said, from there, I may be going back to every Monday. All right, so we'll see how that goes. Anyway, enjoy the rest of your day, the rest of your evening, wherever you are in the world. Thank you so much for watching.